But first and foremost, I did just want to thank everybody for joining me today. And I will cover the importance of critical illness and show you a few ways that this can help benefit your client. And obviously now is a perfect time because open enrollment is right around the corner. And packaging a simplified critical illness with their ACA plan is going to help protect your client. And I'm sure a lot of you know who Assurity is, but just a little bit about our background. We are a mutual company, and we actually just celebrated our 125th year this year. And we are a result of a merger of 3 Lincoln, Nebraska mutual companies who are all started in the 1890s. So needless to say, we've been around for a little while. We are an A- excellent rating, and we can be a one-stop shop for your clients with a broad portfolio of products designed to protect against life's 3 major risks, which are death, disability, and illness. And we do offer Simplified as well as fully underwritten for all of our life and health products. And most of you know our focus is the middle income market for those who primarily make $200,000 or less and that will suffer a financial hardship with a loss of income. And that means even missing one paycheck, they're going to still feel that burden. And the 3 things that we know about middle income is they want convenience. So I'm going to show you with this presentation the convenience of our simplified product. And we also know that they're going to suffer a financial hardship with a loss of income. And we also know that nobody wakes up wanting to buy insurance every day. So we really do want to educate your clients on the importance of adding insurance before it's too late. So during this presentation today, you will know exactly what our critical illness product is and how to use it, as well as a couple selling tools. So for the first one, it'd be ACA cross-selling and packaging it, as well as the second would be life proofing. And I'll go into greater detail later in my presentation as well. And we do offer here at Assurity 2 critical illness policies. So we offer Simplified as well as fully underwritten that will pay a lump sum benefit upon the first diagnosis of a covered condition like cancer, heart attack, or stroke. Now I use those 3 as an example because those are the 3 most common that we pay claims out on. And as you can see, the issue ages up here are 18 to 64. That is true for our Simplified as well as fully underwritten product. And our simplified benefit amounts are $5,000 to $50,000. It is guaranteed renewable to age 75. And then our fully underwritten, the benefit amounts are $50,000 to $500,000. Now this one is guaranteed renewable for life. Now our simplified, it does cover 12 covered conditions, and here at Assurity we do use a 3-category approach. I'm sure some of you are wondering what a 3-category approach is. Well, we have a heart attack category, and we also have a cancer category, and then we have another category that covers coma, kidney failure, or major organ transplant, just to name a few up there. And how the 3-category approach works is, let's say that your client has a $25,000 critical illness policy, and they get diagnosed with invasive cancer. What Assurity is going to do is pay a check for $25,000, and then they continue to pay their premium on time, and a year later they suffer a heart attack and survive. So Assurity at that time will pay them another check for $25,000. They continue to pay the premium on time, and 6 months down the road they're extremely unlucky and become paralyzed due to a car accident. So Assurity then cuts them a third check for $25,000, totaling $75,000 that they've received. If your client does have a heart attack and they don't survive, what we'll do then is, if we haven't already paid out the benefit for that category, we'll pay it to the insured beneficiary. Now, the application for a simplified product is very short, and our underwriting is very simple. So we are going to run an MIB and a script check. If your client is healthy, no medications, then this product will be issued quickly. Now, if you have a client that has a few health problems, maybe takes a few medications, they're not going to be knocked out. But if they forget to state a medication on the application, we may order a telephone interview just to clear up any questions. If you have a client that is diabetic or has a covered condition, unfortunately won't qualify. But if you have any questions or concerns regarding if your client would qualify for coverage, then I would use what's called our PreScreening Checklist. And I do apologize, it's kind of hard to see, but I just wanted to let you know that it is out there, and it is on Assurity as well. And this is great, like I stated, if you have any questions on if your client's going to qualify for coverage. So what you'll do is you'll fill this out and send it to our underwriters to review it, and based on the answers, they're going to be able to tell you whether your client qualifies for a simplified or a fully underwritten. And this is also great if you aren't that familiar with how critical illness is underwritten, and it gives you a great idea on what type of things we're looking for. There we go. So like I mentioned earlier, our fully underwritten product, we do primarily see a lot of doctors, attorneys, and executives apply for this, but I did want you to know that we had a fully underwritten product with those higher face amounts, so that $50,000 to $500,000 benefits. It is guaranteed renewable for life, and it does cover 21 covered conditions. We do still use the 3-category approach, which is the same as our Simplified. We do just offer a little bit higher of those face amounts. One thing I do want to point out that is on both of our products is our return of premium feature that's built in. And this works in the event of a death other than one of the covered conditions. Then 100% of the premiums paid in minus any benefits paid out will be paid to the insured's beneficiary. Now you might be wondering, what if the client doesn't survive the critical illness? Well, if we haven't paid out the benefit already, we will pay the maximum benefit minus any benefits received in that particular category. Now, the reality is that we all know somebody that has been affected by a critical illness. For me, it was my aunt. She battled cancer for several years and passed away, unfortunately, at the early age of 52. I know for a fact that if she would have had a critical illness policy, it would have helped pay for not only medical expenses, but also mortgage bills and experimental treatments. It could have also helped with travel expenses because she lived in a small town on a farm where, the nearest doctor was probably an hour and a half away. And I remember several times I'd go visit her in Omaha because she had to go there for treatment. And she could have used some of the money to take her family on a trip or use the money how she liked. And we all know there's a need for this product because unlike the 60s, 70s, 80s, people are now surviving, but they're surviving with consequences of those financial burdens. And critical illness policies can help offset the cost of deductibles, copays, mortgage bills, and other expenses. Now, I want all of you to take a second and think about what people primarily go to the doctor for. They probably go for flu shots, physicals, broken bones, annual visits, and the list goes on. But these are all minor visits. There are many other people that go to the doctor or even a specialist due to cancer, heart attack, or even stroke. With healthcare costs rising and open enrollment right around the corner, and now is the best time to educate your clients on the importance of packaging critical illness with your ACA plan. And there are several costs associated with ACA plans. These are the expenses you incur depending on which type of plan your client decides to go with. And how is your client going to pay for these expenses? Well, I'm sure most of them are probably going to tell you savings. But let's be honest, just like me, myself, I don't have enough, in savings to cover the cost of $6,350, let alone $12,700. And I definitely can't write a check quickly for that in the case of emergency. So they could also maybe cut costs of daily living, but a way to help not take so much from their savings is by adding critical illness insurance. And let's picture 2 of your clients, and let's really paint a picture. So imagine their names are Jackie and Erin. They're 35 years old, married, they have 2 kids, and they have a high deductible plan with an out-of-pocket expense of $12,700. Jackie unfortunately gets breast cancer in November of 2015. Now, aside from some of the expenses of children, food, utility, and other expenses, they now have to worry about how they're going to pay for the deductible, the $12,700 to meet for 2015. And what happens when treatment continues through 2016? Well, January 1, there's going to be a new deductible that they have to pay. And deductible is going to be going to the doctor, x-rays, chemotherapy, screenings, you name it. And let's say Jackie has to go see a specialist depending on the severity of her cancer, and she's probably going to have to undergo screening consultations and probably prescribed medicine to stop the spread. Now, if she lives in a small town like my aunt did, her doctors and specialists aren't in the same city, so you're looking at additional travel costs as well. And she's going to try out non-traditional treatment, not covered in her health plan, and this may or may not be backed up by the FDA. So she may need to go to Cancer Treatment Centers of America or other facilities like that. And most likely she's not going to go alone. So she's going to inquire additional costs that come with adding family members to go with her for food, hotel stay, those type of things. Now, if she did have a $50,000 critical illness policy, would that have helped before she was diagnosed? Of course. So how this would have helped is it would have paid for the deductible for not only 2015, but also 2016. And then it could have also helped her pay for the non-traditional treatment. And she could have had some money left over to take her family on a trip or to use the money however she sees fit. And here are some of the advantages of having a critical illness policy. Now, this is money they can use for whatever they would like to use it for. And we know that there are several different metal plans associated with ACA, and clients would obviously like to have the best plan, but oftentimes can't afford it. And a critical illness policy is one way that would help. We know health insurance commissions have dropped, and producers are looking for other ways to receive an income. I'm not going to go into full detail on commissions, but for this product, your commissions are based after each sale on a percentage basis, and you get paid a certain percentage up front as well as a renewal stream. And here's a list of a few more advantages as well that are associated. And most of your clients probably don't have a critical illness policy, so it's a great way to go back to your current book of business, to those clients you've already built great relationships with, and educate them on a new product essentially, because most of them have probably not heard of critical illness, and it's a great way to utilize the next generation as well, because there's a lot more people surviving now more than ever. And what exactly does life proofing mean? It's utilizing both critical illness and life insurance to protect from life's risks. Things that you would have normally used life insurance for, you can now be protected with a critical illness. Let's look at both of these questions up here. In the 1980s, what type of insurance would you have sold to mitigate financial risk to your client because of cancer or heart attack? It would have been life insurance. Nowadays, in 2015, what type of insurance should you sell to mitigate financial risk to your client because of cancer or heart attack? Well, now it's critical illness, because unlike a few decades ago, the likelihood of you surviving a critical illness wasn't very high. And now, today, with modern technology and advances, a lot of people are surviving now. And just to show you, you can add critical illness as a standalone, or you can also add it as a rider to our non-med 350, our term 350 plus, participating whole life, as well as our universal life. Just to show you a few of examples there. And what I went over today are, like we all know, Middle America, they love convenience. And with our Simplified product, it is a simple application, simple underwriting. And Middle America are those that will suffer financial hardship with the loss of income or even missing a paycheck. They're still going to feel that burden. And we all know that nobody wakes up wanting to buy insurance of any type. But now is more important than ever to educate them on the importance of having it. And I did also go over a couple sales ideas as well, the ACA cross-selling and packaging that, and then life proofing, adding life insurance as well as critical illness to protect your client's needs. Now, my challenge to you today is to talk to someone at AHCP about which critical illness concept you're going to try first. And I also want you to bring critical illness insurance up in a conversation that you're going to have next week with a client. And like I stated before in my presentation, my name is Taylor Cruz, and I'm a regional sales associate here at Assurity Life Insurance. I am the internal for Bobby Nicolite, who is the regional sales manager. And as you can see here, if you do have any questions after our presentation that I don't cover in the Q&A, you can certainly call or email either one of us, and we'd be more than happy to help you.